the interest rate on the debt is very high. And so when you cut the supply, you improve the bond market. In other words, it performs better. You'll get a lower interest rate. And when you get a lower interest rate, that's good for markets, good for the stock market, good for the economy and so on, which brings in other taxes benefits. So if you think about those three factors, in other words, I emphasize 3% of GDP with those three factors, that can be done. And if it's not done this time, I really worry. I think that everyone who's responsible for that, from the president to the Congress, should recognize, they should take this 3% pledge, but recognize that if they don't get it down to that they are responsible for the consequences that will follow.
Welcome back to the Bitcoin Traveler. Today, we're delving into a critical discussion led by Ray Dalio, the founder of Bridgewater Associates. In a recent interview, Dalio expressed deep concerns about the United States entering what he terms a death debt spiral. Let's unpack his insights and explore what this could mean for the economy and investors. Before we dive in, don't forget to like this video, subscribe to our channel, and hit the notification bell to stay updated with our latest content. What are your thoughts on the current U.S. debt situation? Share your perspectives in the comments below.
Thinking about this issue?
Well, you better pay attention to what's happening, because interest rates, the Treasury interest rate, is the backbone of all markets. It's the foundation of all markets and all economies. And we're getting into a period now where asset prices are becoming pretty high. And so when you have these high prices relatively high, and then you have a rise in interest rates, that can cause trouble. It's likely to cause trouble. So pay attention to actually literally what happens and be careful about that. I would also say that, debt assets in one way or another probably are not going to be a great asset class. There's a lot of risk in the debt asset. People think of default risk, but there's the money and the devaluation risk, because there won't be a default. The central bank will come in and will print the money and buy it rather than to let that default happen. And that's where there's the depreciation of money, the value of money. And so you have to think in real returns, not just nominal returns, and be aware of those risks.
Dalio points out that the U.S. national debt has reached unprecedented levels, raising concerns about the country's ability to manage its financial obligations. With rising interest rates, the cost of servicing existing debt becomes more burdensome, potentially leading to a vicious cycle where borrowing begets more borrowing, a scenario Dalio refers to as a death debt spiral. The combination of high debt and increasing interest expenses could crowd out essential public spending, leading to economic stagnation and social unrest.
Debt is money and money is debt. And we have a problem. We have a supply-demand problem with it. And so a good diversifier for a typical portfolio is that. Some people might say digital currency and so on. I own some digital currency. I own some Bitcoin too.
That's all for today's episode of the Bitcoin Traveler. Do you share Ray Dalio's concerns about the U.S. debt trajectory? We'd love to hear your thoughts in the comments below. Remember to like, subscribe, and hit the notification bell to stay informed with our latest content. Until next time, stay vigilant and navigate the financial landscape wisely.